Hello, everybody. Hope this is working fine. This is probably one of my most important videos. Definitely this year, perhaps ever. And for those of you who know me, you know I like to plan. I like to think ahead. I like to prepare for the future. I like to always think about the future. I think about cycles and technology and leverage and all that good stuff. This video today is about how you can position yourself to build your empire for the year 2030. 9 moves. And some of the numbers in here are quite insane. And this is also inspired by ARK Invest Big Ideas 2026 paper that released early this morning. I went through it and I compared it to my 2026 predictions and my 2030, 2032 prediction videos, like in early December when I did SpaceX versus Tesla, TAM analysis, etc. Tons and tons of them. And it was so interesting to see if ARK and I are aligned, or if one of us is off the reservation. And it's super interesting. And the numbers will blow your mind. But I took a different approach to what ARK do. ARK talked about the big themes. I broke down those big themes into market sizes, total addressable markets, and then identified the leader in each category, and then broke down how big the markets are for those leaders in each category. The result is incredible. Also, we'll talk about AI stocks, crypto, Bitcoin, Ethereum, Solar in here, and a bunch more. Sorry for the long intro, but this is a very important video. We've got to get right. Thank you all for coming. Thank you to the mods in the chat. You guys rock. And of course, not financial advice, just a guy on the internet who loves to think about the future. And a shout out to everybody as well on Patreon. This is from, let me zoom in to see, from Philip. James, following your channel and Patreon has made people tons of money, even taking into account the current situation. Yes, the current situation is volatile, but volatility is good if you can play it. So that's a big thank you as well. Let's get into it. Again, shout out to ARK Invest. This pulled from some ideas from their big ideas, and I wanted to see how their thinking mirrors mine. Let's get into it. Their big themes, just to give you a quick recap of their stuff before we jump into all the themes, they talk a lot about technological convergence. I've been talking a lot about Elon Musk and Musk industry convergence as well. Also, AI and crypto convergence. And they were doing the exact same thing. So from that perspective, we're in line. AI, blockchains, robotics, energy storage, multiomics, which is not in my wheelhouse. I stay away from biotech, but maybe not. Maybe I'll drop an anchor baby there. And then the multiplier effect of synergy between different plays. And this also could have a huge impact on GDP. In fact, I made a dedicated video about how big GDP could get from one asset. So that's also in the Tesla playlist. And they talked about alpha potential without talking about, specific assets per se. But I'm going to try to break it all down. And shout out to the team at ARK Invest and Kathy Wood and everybody there. I love their work. Let's look at the first slide from their presentation. Basically, what this tells me, when you look at historic software investments, technological investments like railroads, cars, electrification, communications, e-commerce, software, etc., it's been pretty nutty. But according to them, the world is entering an unprecedented technology investment cycle. I also call this on my AI impact. By the way, this will be its own playlist called Future Planning, Future Portfolio Planning, something like that. There's no slide for it because this is the first video in it. So subscribe here to this playlist afterwards. But it's going to be so important. Now here, they look at these investment cycles. They have AI software being the biggest, then data centers and space being kind of second biggest, and Robotaxis third, and e-commerce. And I was out to 2030, and I was looking at that, and I was like, I don't quite agree, but let's see where we line up. Now, I'm going to jump straight into it because this is so important. I'm going to break out 9 top themes. Okay, they have 13, I think. 13 big themes. I've got 9. So we're going to talk about just the big ones that matter. And first of all, autonomous vehicles. This is the whole story of how robotaxis could replace human ride sharing, making transport cheaper, safer, on demand, etc. And ARK do believe that by 2030, this could create $34 trillion in global value. And there is one leader, Tesla. They will benefit the most. However, they did say as well, scaling the regulation could hinder progress, but this is huge. I always thought of autonomous vehicles, Robotaxi being a $10 trillion TAM. It's now 34 trillion. We'll break that down as to how they got there, which is interesting. And this is their breakdown. They believe, first of all, robotaxis will replace human ride sharing and human transport and human drivers, making transport cheaper, safer, etc., like we mentioned. But the key players, again, Tesla, they did mention Waymo as well. I think Waymo is a joke because it can't scale. It's actually more expensive than Uber and Lyft in San Francisco, and it takes much longer to get there. It's just not going to be able to compete with Tesla. It's clear as day to me. But anyway, you can. But the good news about Waymo, by the way, is worth $115 billion at the latest valuation. So I'll take that number for their 2,500 cars. But this is the 34 trillion. And the key for this 34 trillion is the EBIT it creates. It could generate $1.9 trillion in annual EBIT. That's where the number comes from. You take a multiple like around 60 of that 1.9 trillion, you get the 34 trillion market size. And this is going to go global. And the Robotaxi, the cybercab that Tesla's building, is also designed to be deployed anywhere. You could drop it in Beijing. You could drop it in Milan. Drop it in Liverpool. Sean can drive around. It'll be fun. Anyway, let's look at some of the current numbers. These are current numbers. And by the way, we're going to come back here a year from now, and this is going to be radically different. I promise you that. So first of all, these things will proliferate. Okay? They are safer than humans. If you've been on a road lately and you look at the humans you're driving against, wow, it'll terrify you. You want to be in a self-driving car. You do not want to be in a car you drive where you cannot react at 40 milliseconds like the machine can to crazy people on the roads. And believe me, they're getting crazier by the day. Ever since 2020, something happened, but drivers have gotten worse. Anyway, if you look at the big players here, you got Waymo, Baidu, a Pony AI, WeRide. Tesla is tiny in terms of the number of cars, but that's all about to change because Tesla is by far the leader in miles. They have an over 7 billion autonomous miles under their belt. Nobody else is even close. And that's what matters. Elon's not trying to get to market fast. He's trying to get to market perfectly and then scale in a rocket to the moon type manner. And that's coming, okay? They're adding 10 robotaxis a week in the Bay Area and Austin. So watch this space. And they're about 10% of what Waymo has right now. Let's get into the second biggest story. At the end of this, I'm going to identify all the players, aggregate the TAMs, show you how to position your portfolio, but we've got to do our homework first. Second biggest is Bitcoin and digital assets, which is near and dear to my heart, by the way. Very interesting. They believe Bitcoin is likely to dominate the market cap for cryptocurrencies. And they said some crazy things, a crazy CAGR of 63% during the next 5 years. You don't want to look at the retire on model and plug in 63%. 63% CAGR, by the way, if you plug in the Tesla price right now of 430 and a 63% CAGR for 5 years, you get to $15,000. Crazy, crazy. 15 grand. Imagine what Bitcoin will do. Anyway, let's break down, because they talk about digital assets too and smart contracts, which is very interesting. We will spend a minute on this because a lot of people that watch this have also watched crypto, and you need both. You need AI and crypto, as I'm saying since I started the channel. Here, they see Bitcoin as a store of value. Again, that's 63% CAGR. What's also interesting is see platforms like Ethereum and Solana. They call out both of those layer one, and they have a very interesting twist. Solana and Ethereum as programmable money, decentralized finance, etc. And they are expanding at a 54% CAGR, not 63, 54, but I'll take that. Anything above 20% CAGR for 5 years is insane. So buckle in, my friends. Now, this means that the total market value of Bitcoin and smart contract networks, and they say there'll be 2 layer 1 blockchains that'll make it. Guess what they are? Yeah, Solana, Ethereum. Will reach 28 trillion by 2030. Now, this took me aback because this is higher than some of my TAM projections for this space. But anyway, we'll go through it. And smart contracts will generate 192 billion annually at a 0.75% take rate. Consider a credit card as 3% take rate, 3.5%. Crypto will take a 0.75% take rate. And again, 2 layer 1 blockchains likely to dominate, capturing the majority of market share and cash flows. But there's some interesting twists as we dig into this. I didn't think this video will take so long, but it'll take a little while. But this is, again, very important video. Very important. You probably want to watch it twice. I will. Anyway, US ETFs and public companies now hold 12% of Bitcoin supply. This blew them away. ETF balances grew by 20%, from 1.12 million to 1.3 million, and public company Bitcoin holdings went from 598,000 to 1.1 million. And I think 710,000 of that is MicroStrategy. So he's got 70%. It's nearly Pareto efficient to 80-20. And as a result, the percent of Bitcoin outstanding held by ETFs and public companies has gone from 8% to 12% in a year. And they're not going to slow down. The supply crunch will kick in one day. I just don't know when. But at this clip, it's pretty astounding. Now, it's also very interesting as they broke down the Sharpe ratios, which are near and dear to my heart. I look at Sharpe ratios for everything. I use them to trade and identify key assets. And I try to project Sharpe ratios as well. But remember, Sharpe ratio does not mean absolute gainers in terms of return. It's the adjusted return, the risk-adjusted return. Remember that. And here it says that Bitcoin, in yellow, won the bull market Sharpe ratio since the bottom in November 22. It also just beat out Solana in the 2-year Sharpe ratio. And the year-to-date Sharpe ratio, it smoked everything. So that's what they like, and that's probably why they give it a higher CAGR. But it's interesting that Solana came number 2 and Ethereum came number 3 in terms of returns. Remember as well, in life, the bigger asset returns typically aren't as big as a smaller asset. If a small asset can come from behind and dominate a bigger asset, the ROI is far higher, the CAGR too. So I do expect great things from Sol and haven't sold one token. Number 3, robotics. Wow, we've gone from autonomy to crypto to robotics. The rest will go faster. But here, this is general purpose humanoid robots for industrial and household tasks. And the main play is Tesla Optimus, annual revenue, $26 trillion. We'll break all that down in a minute. But let's break down what robotics is, how big it'll be, and why it is so important. Again, industry and household, they mentioned the 26 trillion annual value of revenue by 2030. Huge. Half, by the way, 13 trillion will come from manufacturing, and 8.3 trillion from household chore automation, and 5 trillion from labor savings. Labor savings. Think workers in factories, etc. And they talked about the key pioneer include people like Tesla Optimus and Figure Technologies, and they're advancing embodied AI as well. And they believe there will be widespread use of humanoid robots in 80% of homes and could add 6 trillion to GDP. And that would boost economic growth by 20%. Again, this ties into what I did a month ago on a GDP video and how it can accelerate with robots. Wild. But let's look at the household example, because this one was interesting for me. This took me a little bit by surprise. They put together this chart of how most work can be done at home by robots, but at home it's unpaid. So it doesn't count towards GDP, even though it's worth about 68,000 per household per year. Can you imagine all the work done in your house is worth 68 grand per year? And a household humanoid robot could turn much of that invisible work into real economic activity by doing the chores, freeing people's time to do work or rest or have fun or spending time in the robot itself. Who knows? And they believe that could add 62,000 per household per year to GDP. Instead of cleaning your house and doing all the chores, have the robot do it, and you go out and do something else productive. We'll see. A little high, in my opinion, but I'll take it. I think the big value is the industrial use and having a robot as a barman, gardener, security guard, etc. Number 4, tokenized assets. This was super interesting, and the big play of reason why I'm very interested in Solana is the tokenization of everything is coming. Larry Fink never, ever, ever stopped saying that. But to tokenize everything, you need extreme finality, we're talking 30, 40 milliseconds, and extreme scale, 1 million transactions per second. You've got to be able to beat NASDAQ speed. That was the mission for Solana since 2019. That's it. But this number is quite large. On-chain tokenization of real-world assets like sovereign debt and equities, market value $11 trillion. Boom. This one I was very happy to see because I didn't peg anywhere near that value for tokenization in crypto. Let's talk about tokenization of assets. What exactly does it mean? Well, real-world assets, debt, bank deposits, equities, everything would be tokenized. Real estate would be tokenized, and you'd be able to have transparent ownership and transfer. Instead of spending 6 weeks trying to close the sale of a house, stick it on the blockchain and transfer it to somebody in 40 milliseconds. And then you cut out all the middlemen feeding off the sale of the house, etc. Anyway, let's move on. Tokenized assets will go from 19 billion today to 11 trillion by 2030. That is massive growth. And that will represent 1.38% of all financial assets globally. And they say ETH will be a big player because maybe for bigger, more secure assets, stablecoins will be huge as well. And things like payments, etc., will all be big too. And there will be hopefully very clear regulations. When they do come, they are expected to unlock massive growth in tokenized debt and equities, and it'll drive crazy adoption in crypto and across all of TradFi too. Now, there's another interesting twist here. We're back on crypto. Maybe half the story is crypto. Again, two big plays, AI, crypto. That's it. Make sure you are invested in those spaces. First of all, RevGen versus monetary assets. This is a cool twist, cool little chart. And when they applied a revenue multiple of 50x to its network, it suggests that 90% of Ethereum's market value is attributed to its role as a monetary asset. Solana generated 1.4 billion in revenue. It made more money than Ethereum, suggesting 90% of the valuation of Solana is a function of its network utility. I've always been so confused by the statistics, the data, the 60 ratios that I run of all the different crypto assets. You know, Solana does 20x more, has 10x more users, makes more money, far faster, yada, yada, everything across the board. This now explains, shout out to Kathy Wood and ARK Invest, why there's such a discrepancy in price. One is valued like Bitcoin. Bitcoin's all monetary value, and the other one's valued like a network. Now, this takes me back to my first principle thinking. What's more important? Is the valuation of a network more important or a monetary asset? You know, it's hard to see. If you look at networks like Facebook and all that stuff, that's a network. Monetary asset, gold, Bitcoin gold. So it's clear we don't know who's going to win. But if you have something that generates a lot of money and a lot of transactions, a lot of value, that should have more work than something that is like a store of value, in my opinion. Therefore, I'm leaning heavy on the green stuff because I believe in networks and network value. We'll see who will win at the end of the day. At the moment, I think it's going to be Solana. Anyhow, energy storage, number 5. We're out of crypto again. Distributed energy. This is critical because the grids can't create enough juice. And the two key players are Tesla Energy Megapack, Tesla Solar, much smaller. But the value is 10 trillion, just under tokenization, 11 trillion. Let's talk about energy. Distributed energy is absolutely critical because if we need to expand our grid, the easiest way to do it is store it during off-peak times and use it during peak times. You can double the amount of energy a grid produces. It's that simple. Everybody needs industry-scale batteries. And the investments are going to expect to hit 10 trillion by 2030. And it is absolutely critical to data centers, not only to get power cheap and store it when it's cheap at night, stick it in the batteries and use it during the day, but also to make sure you smoothen out the power that's going into your GPUs that cost billions. If they get a surge in voltage or something, or wattage or whatever it is, I'm not an electrical engineer, you fry your GPUs. So these things protect your GPUs as well. And that's going to generate a huge amount of GDP and growth, etc. And if you look at the CAGR for this, ARK believe energy storage will 19x over the next 5 years, 2026 to 2030. And by the way, it 19x'd 2016 to 2020. Huge. Okay. We are on the cusp of something massive. Deployments of stationary storage will go up another 19x to get to that 10 trillion. Guess who the leader is in energy storage? Write your answers on a postcard and mail it to. Kidding. You know. Anyway, let's get on to the next one, AI agents, which is near and dear to my heart too, because I think this will be a massive revolution. And here they believe AI agents will be worth $8 trillion. They'll handle e-commerce decisions, handle your business. They can be your CEO, your marketing department, your finance department, etc. And two key players there are X, integration and AI from Grok, and Macro Hard that's coming. And I did touch on yesterday that employee did get canned for mentioning what the vision is for Macro Hard from XAI. It is next level agentic AI agent stuff that's going to disrupt the heck out of everything. Be prepared, but let's talk about how this actually works. AI agents will become like consumer operating systems, do all the stuff, to handle everything, to find stuff, to negotiate stuff, to buy stuff, to sell stuff, who knows what. And that will handle $8 trillion of spending by 2030. And it'll represent 25% of total digital commerce. And AI agents will capture between 2 and 25% market share by offering crazy personalized recommendations. And they will outrip the ability for you to Google search and buy stuff on your own. These guys are going to do it. That's the huge opportunity they see. And then they'll integrate digital wallets, enter crypto. AI agents will enable frictionless one-query purchase, transforming click buying into seamless personalized transactions that happen many times per second. Unbelievable. Unbelievable. It's all coming. It's all happening, folks. Number 7, Multiomics. This is not my wheelhouse. This is gene editing for common diseases and extending healthy lifespans. The total TAM is about $2.8 trillion. It's massive. Those that have money will pay anything to live longer. Those who are sick will give all they have to get better. That's why the market, the total TAM of this is probably a lot higher than 2.8 trillion, I believe. But anyway, let's break it down. Again, not my wheelhouse. I'm not a biotech scientist or anything like that. But gene editing, which has been on the cards for, 7, 8 years now, could target common diseases, cardiovascular conditions, cancers, other types of health risks, fix them all. And the gene editing market alone is worth 2.8 trillion. And the global opportunity will be 2 to 3 times larger as well. And multiomics is the whole personalized longevity intervention stuff. Diamantis from Moonshots is big into this as well, has a lot of investments. And this, many believe, it could double healthy life years. And this is very important as well, because sometimes as you get older, like me, it's no fun getting old. But anyway, and the current biotech represents just 0.1% of this opportunity. So the upside is massive. And as I promised, I'm going to look for 1 or 2 anchor babies just to have a small position in case this thing takes off. If it goes to 0, I created, I think, CRISPR way back in the day. Quick in and out, but not in anything now. I just found it to be too risky, too difficult to predict. But maybe there is an opportunity. Next, maybe I can use AI to shore up my weakness in the space, to turn me into a PhD level biotech physician or something. I don't know. We'll see. Number 8, space and reusable rockets. I've done multiple videos in space. I have a whole thread called Space. And this is all about low-cost launches. There is one player that puts 90% of all cargo into space. That's SpaceX and Starlink for global telecommunications. And we know data centers are going into space. Now, this is really cool. I'm so happy to see ARK doing this. Their TAM is estimated $2.5 trillion. Go back a month and a half and look at my Tesla versus SpaceX video. These numbers are uncanny. Very good. Maybe ARK is watching my stuff. I don't know. We'll see. Reusable rockets. There's only one company that can really do it. I know one other company managed to land one once, but that's it. Reusable rockets cut launch expenses by reusing hardware, making satellite deployment extremely affordable. And it means you can rebuild the whole internet in space, like you. And that's critical. And satellite internet services are going to generate about 160 billion by 2030. SpaceX is the leader. That's it. No ifs, ands, or buts. There's other people that play around like China and others, but nobody touches Elon Musk in space. And he does it, by the way, as a side hustle. Builds a company worth $1.5 trillion. You can't make this stuff up. Anyway, When we get to the stage where we're deploying AI chips and data centers in orbit enabled by reusable rockets, maybe have an Optimus robot out there managing stuff, we will overcome terrestrial limitations, terrestrial cost of energy, and so much more. They have all the infra. They can put everything up here. They got the global telco in space to do it around the world. It's coming. It'll take a while, but it's coming. Anyway, 2.8 trillion in the box. And finally, AI infrastructure, which surprised me. It's very small. I thought it'd be a lot higher. In my review, it was a lot higher. But this is data center systems, servers, GPUs, TPUs. And enter Tesla Dojo. Dojo 3 is back. AI 5, AI 6, AI 7, AI 8, which will go into space, is back. This is big, very big. And I'm very excited about Tesla creating silicon. AI infrastructure. Next-gen data centers will be optimized for AI workloads, which are ever increasing because the demand for intelligence is to the moon. Keep talking about the moon. And it will be better servers, better ASICs, better GPUs, better TPUs, which will handle a ton of transactions all over the world. They estimate nearly 5 to 6 billion people will be using AI real soon. Very big. Be invested. Wait for the best part that's coming, by the way. We're just going through the homework first. 1.4 trillion will be annual global investments in AI infrastructure. Big players, Broadcom, Amazon, NVIDIA, other ASIC and cloud providers will be there. And there could be some big disruptors to what happens on the world. There could be new big disruptors to what happens with silicon. New silicon players like Tesla. New Musk industry players that put silicon from Tesla into space and then make data centers happen up there, which could hurt the traditional GPU stuff. Anyway, let's talk about the conclusion. This is the important part. Now, this is definitely the not financial advice part, but this is the numerical part. I dovetailed the data from the report from ARK into my data and created a mashup with a couple of little tweaks as to how you need to position yourself for the next 5 years. Okay. First of all, a couple of little things. There's tons of differences. I touched on some of them already. I am surprised ARK left out defense like Anduril and Helsing. I believe as the world becomes a tinderbox, there will be much more demand for the likes of Anduril, Palantir, Helsing, etc. from a defense perspective, not a war perspective, but a way of preventing war, which is why I am interested in this space. I don't like war machines. I like machines that prevent war. I want that to be very clear. I was also very happy to see their piece on tokenization and total addressable market of that. But some of my TAMs are very different. I was lower on crypto, but higher on autonomy and robots. And my AI infra is higher, and a few other things I mentioned along the way. Let's summarize in one big chart, just to give you a visual of what we're talking about here about these spaces, and then we'll map it to the stocks that are leading in the space. That's the mind-blowing part. First of all, autonomous vehicles, the largest, 34 trillion, way higher than my 10 trillion, but I'll take it. Bitcoin and digital assets, 28 trillion, way higher than mine too, but I'll take it. Robotics, 26 trillion, minus 30 trillion. Close, but no cigar, as they say, maybe, I don't know. Tokenized assets, higher than mine, 11 trillion. Distributed energy, 10 trillion. I wrote a paper 2 or 3 years ago that Tesla Megapack business is worth $1 trillion. That was 2 years ago. So 10 trillion, absolutely right there with ARK. All consumer OS, which is the AI agent stuff, 8 trillion. High, but yes, it's going to happen. Multiomics, 2.8 trillion. Could be a lot higher. The TAM for that could be massive. As I said, people will pay anything to live longer or live healthier or fix a disease or something. Reusable rockets, 2.5 trillion. Boom! Almost identical to my video a month and a half ago. And AI infrastructure, 1.4 trillion. That is low. So let's get to the juice, which is the crazy part. Taking all this together and identifying the big themes, and then the market size, and then the leaders in each space. This is the alpha, my friends. Free alpha on the internet. Hit a like and subscribe if you're not already here. Anyway, and by the way, I'm streaming this on X as well at the same time. People ask, can you stream more stuff to X? So this is a very special video that people need to know about, so it's going out there too. X is Twitter. But here, autonomous vehicles, 34 trillion. Leader, Tesla. No question about it. Robotics, 26 trillion. Annual revenue opportunity. Leader, Tesla. Yes, there will be other companies, But there's no company that has the manufacturing at scale, who has the brains, who has the XAI intelligence component. Nobody. Global comms, nobody. Charging, nobody. Batteries, nobody. That's the difference. Chips, AI 5, AI 6, they'll go into these things. Nobody has it. Nobody. They have to buy it somewhere else. Number 3, Bitcoin digital assets. $2.28 trillion market value by 2030. Bitcoin, Ethereum, Solana. I'm kind of seeing a lot of interesting patterns here where my bags are very heavily represented by this ARK study. Shout out to ARK. You guys are incredible. If you ever want to do an interview, I'm right here. Saluti, Richie. How are you? Thank you. Then tokenized assets, Ethereum, Solana, 11 trillion. You take Bitcoin and digital assets, 28 trillion, and add in tokenization of everything, 11 trillion. It becomes the biggest TAM. That's why I was a little off, because I didn't believe it's that big, but I'm just sharing the data. Distributed energy, 10 trillion. We agree. Tesla, leader. AI consumer operating systems, AI agents, 8 trillion. XAI is already the best AI. XAI already has the most real-time information on the planet through Twitter, X. XAI has the most coherent compute on the planet, 1 gigawatt, going to 1.5 gigawatts by April. Nobody can catch them. XAI have 1 million GPUs from NVIDIA running at the same time, all speaking together. XAI are building MacroHeart, which shall have the best AI agents on the planet. Watch this space. I always said OpenAI was never going to make it for years. That was a very unpopular take, but now you see why. There you go. Where were we? Multiomics, biology and longevity, 2.8 trillion. Biotech firms, gene editing firms, maybe like CRISPR, etc. I will be digging into section 7, and I'll be looking for positions in a couple of anchor babies. Thank you. Again, ARK Invest for this. AI infrastructure, 1.4 trillion. NVIDIA, Broadcom, Astera, AMD, Tesla, AI 6, AI 5, AI 7. I think this is very undervalued for AI infrastructure. Very undervalued. 1.4 trillion. I think it's going to be a lot higher. Thank you, Vincent Jones. We shall see. And reusable rockets, 2.5 trillion. SpaceX. There's more. Wait a second. This is a juicy part. This is the part that will blow your minds, that you will not see anywhere else. Check this out. Of all of these 9 categories, 6 of the 9 are Elon Musk industries. The top 2 are Tesla, and 4 of the 9 are Tesla. See a pattern here anywhere? Is it a coincidence he's in all the right place at the right time? There are no such thing as coincidence. Very important. You have a position that I've been hammering the table on, and I made myself very unpopular for saying that for a long time, because more than half the planet hates Elon Musk, but that should not impact your alpha making decisions. Even more mind-blowing is this. Total opportunity and Musk's addressable market. Total opportunity pool, $123.7 trillion from all of these puppies. $123.7 trillion. The Musk addressed market is $109.9 trillion. That's where your head should explode. At least mine did, because I didn't expect it to be that high. And I know the numbers intimately. This is the breakdown of the players and the synergy. Remember, synergy. You got Tesla, autonomous vehicles, robots, energy, AI, infra. They have a little bit of Bitcoin, so I threw it on there. Shout out to Cern Basher. He likes when I talk about Bitcoin and Tesla. Aggregated opportunity, $71.4 trillion. SpaceX, reusable rockets, and AI infra. I gave a little higher one, $3.9 trillion. Addressable market, XAI, AI agents, AI infra, $9.4 trillion. Just scratching the surface. And again, 6 weeks ago, my video, I said the SpaceX IPO is overhyped. People out there were saying, I'm going to ditch all my Tesla and buy SpaceX. And I said, do not do that. Yes, SpaceX valuation could 2x from the $1.5 trillion IPO. Maybe 3x. But nothing like the 10, 12x upside that Tesla has. Nothing, okay? That is the difference. Now, next step for you all as investors, and then we wrap. I don't even know how long I've been talking for. Hopefully not too long. First of all, always, always, always identify the pioneers early. Again, this is not a coincidence. Sniff them out. Find them. Find what they are building. Invest early. It makes investing a lot easier, much easier. Next, diversify, but in a very concentrated manner. Okay, I've shared all the different themes here. Have a little bit of everything, a little bit of tokenized assets, a little bit of robotics, a little bit of autonomy, maybe some multiomics. I don't have any multiomics. I've got SpaceX through proxies. I've got AI Infra galore. I've got distributed energy through Tesla. And I got Bitcoin digital assets, but be exposed in a weighted manner. If you look at my portfolio, you'll see it's very much aligned to the size of these TAMs. That's how I operate. I've mentioned many times. Monitor emerging regulatory frameworks because governments could put a pin on things, okay? Governments could decide to kill AI, kill Twitter, kill space, kill everything, you know. And you've seen them attempt to do that already just in the past few weeks. Watch that very carefully because that could change the game too. And also, start rotating and stacking on strategic dips. If you have something that pumps that isn't on this list, okay, but you don't have anything on this list, it's time to take some profit, rotate into it. You know, could be, as like a thief says, I'm selling all my silver at $100 and I'm going to buy AI. There you go. That's a good way to do it. And by the way, I always talk about 5-year plans. I was trained to think in 5-year plans, 5-year plans. I am already thinking about my 2030 to 2035 rotation. After all, this stuff goes to the moon. Rotate out and be into the next stuff. We don't know what the next stuff is yet, but I'm always, always, always looking around the corner. That was it, my friends. Big one today. I want to make sure. I hope everybody likes. I got to say a big thank you once again to, if I could stop juggling all these different screens. Hang on. Yeah, there it is. Ooh, there it is. I can't see all the people that, hold on. I hope I'm still working too. 37 minutes. Wow. Maybe 6,000 people watching. That's amazing. Anyway, I can't see all the people that gave me stuff. Anyway, for some reason, I wanted to say thank you to the moderators and the people that gave super chat stickers. Let me see. Tough hands. Vitru, Vincent Jones, Sconed, Swiss Guy Ritchie, Chaotic Coder, Trulli, Buckhorn, DBF 430, GQ Trader, Nick M, Tchaikovsky, Anglo Blackson, Zeno, Piper, Yunka, Bjorn, Dreams, QC Coiner, Halakele in Hawaii, J. Douglas, Crypto Cruiser, Graham Smith, Jean Pierre, etc., etc. Thank you all for coming. I hope you enjoyed the show. Don't forget to like and subscribe and share. Share with people you care about because they need to be positioned. The next, again, there's an asteroid hitting this planet. It's going to destroy a lot of things, but it's also going to make a lot of things, and you need to be positioned. Thank you all. Sean D, T&D, K8, Mary Magdalene.